of fiat. It's like late stage fiat. They took a lot of fiat ideas, like leverage and the necessary of interest rates, and kind of brought that into the quote unquote digital assets realm. And I think that the actual innovation is Bitcoin. The actual innovation is true decentralization, hard money, censorship resistant transactions. That's the innovation. And like 99% or more of what we're seeing out there. I mean, there's interesting experiments, but anything that involves tokens and seigniorage and speculations and leverage is just like it's a scammy fiat kind of industry built on top of it. And it kind of has to blow up.
When it traded for $21,414, Bitcoin has been fluctuating sideways and has been doing so for a while. Since then, Bitcoin has fluctuated between $15,000 and $18,000. While the bulls are hoping for a run before 2024, it is anticipated that the halving in the early part of the year will spark a run-up, as it often does every 4 years. However, macro expert and investor Lyn Alden thinks things might be different this time. Lyn outlined the anticipation of a 4-year cycle disruption during a fireside conversation at the Pacific Bitcoin Conference. Lyn emphasized that this has previously happened during periods of significant inflation, such as in the 1930s, 1970s, and from 2000 to 2011, when the market saw extended sideways movement. Although Lyn anticipates a lengthier recovery, she thinks that despite the absence of institutional investors. But until we hear from Lyn, if you're new to the channel, be sure to subscribe. If you haven't already, so we will provide daily content to keep you updated on the latest news.
So I think it comes down to like time frame expectations. And so if you look past over the past 40 years, if anyone has seen like an interest rate chart, for example, you start out at a very high level after the 70s. And you have 40 years of lower lows and lower highs of interest rates. And that's allowed for higher and higher asset prices, whether it's real estate, whether it's equities, just higher and higher. And my thesis for the past couple of years is that we are entering a structural change where once interest rates get all the way to zero or negative in some countries, that there's really not much further to go, and debt is already super high. And so we're going to start entering this regime of sideways to higher interest rates, which means generally lower average valuations and generally just a lot more like turbulence in macro markets. It's not that constant 40-year bull market. It's not that thing of just things always go up. When we look at, say, for example, the U.S. stock market, stocks go structurally up over and over again, but there are like these long periods of time, whether it's, say, from the year 2000 all the way to 2011 by the time it surpassed it in inflation-adjusted terms, or you go back to the the 70s, you basically had this choppy sideways stock market for over a decade, or you go back, of course, to the 1930s, and it took a very long time for the stock market to recover. And I think, especially in inflation-adjusted terms, I kind of think we're in that environment, and I think we have to think differently about the market regime we're in now compared to any time in the past 40 years. I think we're going to be in a more constrained world, less globalization, and a more difficult energy situation. I was actually going to say, that's actually a good point to tie it into Bitcoin, because when we think of Bitcoin, we also think of it in a developed market perspective. We think of it as a United States person, we think of it as a European, for example, and people are like, why do you need Bitcoin? What is Bitcoin useful for? Whereas when you go to Argentina or Nigeria or dozens of other countries in the world, it's far more obvious why people need Bitcoin and why they might be interested in it, and why they might be interested in things like stable coins or things like ways to get US dollars, basically various types of harder money than whatever their local money is. And when the dollar gets super strong like it is now, the Fed is increasing interest rates, they're doing quantitative tightening, and they're trying to rein in inflation. And the problem is that there are so many countries in the world that buy commodities in dollars, right? So they're having a much harder time buying commodities. And then a lot of them have dollar financing. They have dollar-denominated debts from European lenders, from American lenders, from Japanese lenders, from Chinese lenders. These just dozens and dozens of countries in the world get squeezed when we do this. And imagine you're a country and basically another country can dictate your monetary policy for you. That's kind of the world we live in. And what Bitcoin comes around and does and says, here's an alternative. It's new, it's volatile, it's poorly understood, but it doesn't change its monetary policy based on the decision of a handful of people in a room. The Fed is basically a council of elders that sits around and determines the price of money. right? And Bitcoin doesn't
Crazy.
have that. It's an open network. And so right now, kind of for lack of a better alternative, all the countries in the world, and especially the periphery countries, are tied into the dollar system. And so they're at the whims of the Fed. They can loosen dollars, and that usually what happens is these countries go out and they take on a lot more dollar-denominated debt, but then that comes back to bite them when the Fed can then arbitrarily at any time increase interest rates, strengthen the dollar, and it's like all of your liabilities are being hardened. And so what Bitcoin comes around and does and says, here's an alternative, and here's something that's worth exploring. So, I mean, I think most people here have heard of Bitcoin Beach, right? So that, what was it, 2019 when they started? And they build this bottom-up community in El Salvador, and it's a small, circular Bitcoin economy where a large percentage of the population is educated on it, they understand it, the Bitcoins are locally held. And, there's been a lot of focus on nation-state adoption. And I think that's healthy. I mean, it's obviously a big sign of ongoing structural adoption when nation-states adopt Bitcoin. But of course, you can't impose education from top down. You can't impose buy-in from top down. And when we look at politics in general, grassroots movements are always more powerful than, like who has the most money for financing, for example. If the candidate's not right, it doesn't matter how much money you throw at it. And it's kind of the similar thing. If people don't understand Bitcoin, it doesn't matter if the government mandates it or not, or mandates its legal tender. And so I think nation states can do a lot by making it not a taxable currency, but I think that actual adoption has to come up from these much smaller communities. And one thing we've been seeing over the past year or two, especially the past year, is that they've kind of replicated the Bitcoin Beach model, where you have Bitcoin Lake, you have Bitcoin Island, you have Bitcoin Jungle, right? There's little communities popping up in Costa Rica, Guatemala, Vietnam, Isle of Man. There's basically all these different little communities popping up, and I think that's only going to accelerate. So I think it's obviously a bumpy process. It's obviously a very volatile process, and it's hard to understand, but it's in an uptrend. I've had debates online, and most there's nearly 200 currencies in the world. And how many currencies are useful medium of exchange outside of their host country? If like Egypt, for example, is a country of 100 million people. If I take some Egyptian pounds and I'm in New Jersey, what do I do with those Egyptian pounds? I don't even know if a bank would take them and convert them. Most banks wouldn't. It'd be very hard to actually find a way to use that to purchase anything or transfer anything outside of Egypt or outside of maybe a couple countries around Egypt. And then you can pick another example like Norway, for example. Norway's a wealthy country. If I had Norwegian currency with me in New Jersey or here in LA, what do I do with that? Right? It's not accepted outside of its like enforced monopoly area. I mean, you could eventually find a way, but it's very challenging. Whereas there are some currencies like, if you go to most countries in the world and you have dollars, you could find someone to take them off your hands pretty easily. It's not that hard of a process. If you have a gold coin and you go to most countries in the world, so you can eventually find someone to take that off your hand. It's not rocket science to find someone. And we're starting to, over time, Bitcoin is becoming a top 5 or, probably top 5, definitely top 10 globally saleable money, which means that if you have Bitcoin, especially in urban centers of the world, reasonably tech-savvy areas, you can find someone to take Bitcoin off your hands a lot easier than you can for many other fiat currencies of the world. I mean, it's out of the 100+ currencies, it's getting up there, and the trend is obviously heading higher. And I think we're kind of seeing the same thing when it comes down to these individual communities that are building up, right? I think those are more powerful than top-down attempted implementations. I think the more people in a community that understand Bitcoin, get educated on it, and then they see it firsthand. I mean, basically, it's like you need a critical mass of merchants accepting it, people wanting to use it, people saving in it, and then you get that circular community, and you go to an underbanked area especially, and they get the benefit right away, and I think it's powerful. So I think malinvestment, by definition, has to die eventually. Otherwise, it was not malinvestment, right? And so if it is malinvestment, and I think we all agree that this was potentially fraud in addition to malinvestment, so this was like a double whammy, right? But if you have malinvestment, it has to die eventually. And things that are just heavily built on speculation die eventually, especially if, like I said on my prior talk up here, that it's one thing to gamble and know that you're gambling. If you go to Vegas for a fun weekend, sure, have fun. the risk comes when people don't realize that they're gambling and they're gambling. And so I view most of the kind of like FTX and similar things as almost like an extension of fiat. It's like late stage fiat. They took a lot of fiat ideas like leverage and the necessary of interest rates and kind of brought that into the quote unquote digital assets realm. And I think that the actual innovation is Bitcoin. The actual innovation is true decentralization, hard money, censorship resistant transactions. That's the innovation. And like 99% or more of what we're seeing out there. I mean, there's interesting experiments, but anything that involves tokens and seigniorage and speculations and leverage is just like it's a scammy fiat kind of industry built on top of it. And it kind of has to blow up. And actually, when I was up here before, Alan Farrington made a good point that it kind of has to blow up together due to how interweaved we all found out it was. Now, there could have been a different timeline where there was more sideload leverage. It didn't have to be this interconnected, but it is natural for these things to develop like this. But because it turned out to be so interconnected, it kind of all had to fall at once, unfortunately.
Do you agree that price doesn't matter in the short term? Leave a comment if you found the content interesting. Click in like button. It really helps the channel find viewers similar to you. If you're new to the channel or haven't subscribed to it, click in subscribe button. We post content daily to keep you up to date on the current market and news. Thanks for watching. See you in the next video.